What's up guys, welcome back to my channel. Don't forget to like, comment and share this video, and you can also subscribe to my channel and smash the notification bell up there for more videos and more updates. This video I'm going to show you the pattern that is actually happening in the market all the time. By knowing this pattern, you will able to master the market. You will know exactly when the trend is trending up or uptrend or the downtrend. So you see, knowing this pattern and doesn't apply them in forex market out there, that means that you will be unsuccessful. That is why when you know this pattern, you must actually apply them. You see, information doesn't bring transformation, but conversion does bring transformation. So without further delay, come with me and let me show you this pattern out there in the market. So let's go. Now I'm gonna be showing you the pattern that is obviously happening when the market is uptrend and try to reverse downward. This pattern you will find them. For example, when the market goes up and it's trying to reverse down, that means you will that the pattern will show up, so you know exactly it is going to be bearish. So example, when the market goes up, comes down, goes up and form the letter M, what we call the double top pattern here. This is the neckline. That means you know that the market will be reversing. So you can see right here, market goes up, comes down, goes up, comes down. This is the first third here, second third here, this is the neckline. So you can see clearly here. If we look at this one, you can see the chart right now in the current market. You see the market goes up, starting from here, it goes up and then it goes down again and it goes up, and then you see it forms the double top. This is the neckline. So you see first thirds here, second thirds. So actually when to enter, you must know when to enter. When the market goes up, so when the market goes up and start trending down, you don't take the trade quickly here. You don't enter here, you just wait for the reversal. That means the market goes up, comes down, and it will retrace to test this first start here. So when it tests this first start, so this is the right place for you to enter is here. You enter here and then you take profit. Yeah, you can see you take profit there. So you see when the candlestick pattern comes down now, you respect this area, and the market goes up again. This is how you identify the double top pattern. Okay, right now another pattern that you can see it when the market is going uptrend, and then when it try to reverse down, you will see the pattern. This pattern is called the head and shoulder pattern. So when you spot this head and shoulder pattern, that you must know that the market is about to reverse downtrend. So you can see this is the example of head and shoulder. Okay, the market goes up and then it comes down, it goes up, comes down, and you form the head and shoulder. This is the shoulder, this is the head, and this is the shoulder. This shoulder, this is the head. So when you see this pattern happen in the market, that means you know that it is an head and shoulder. So when you spot this, you know that the market will be reversing. So you quickly take the trade in there. So by looking at this pattern here in the candlestick, you can identify. You see the market goes up and then it comes down, goes up, and it form a head and shoulder. Can you see that? Okay, it formed the head and shoulder. So we can identify this is the shoulder, yeah, this is the head, this is the shoulder. If you draw the line correctly, you can see it clearly here. So you can see the market goes up and then it comes down a bit, goes up, and then it forms the head and shoulder. So how are you going to enter the market? That is the question. Okay, when you are going to enter the market is when the market comes up, it with the reverse go up and form the head and shoulder like this. What you will do is you take stop loss here. You prevent yourself from blowing up the account, and then you enter the trade when when the market goes up, comes down, goes up, and respect this area. That means you're gonna enter here, or you're gonna take trade, and you take your stop loss here. In that way you will prevent your account from blowing up. So yeah, how you identify this is how you identify add and sold the pattern, especially when it is time to bears. I'm going to show you another pattern that is actually happening in the market at all time when you spot the market. So I'm going to show it to you that the pattern, the name of the pattern is called inverse head and shoulder and double bottom. So when you identify this pattern in the market, inverse head and shoulder and double bottom, it signifies, or it's trying to signal you that the market is going to be a bullish. So you must put it in the mind. So you can see it, the pattern of the inverse head and shoulder will give you like this. The market comes down, it goes up, it make a inverse head and shoulder. Okay, but actually let's draw it again. Okay, it comes down. Actually the market gives us this pattern. This is called the inverse head and shoulder. This is the shoulder here, this is the shoulder, and this is the head. So when you see this pattern in the market, that means you know that the market will be trending bullish, so you can take the profit. So if you come to the real chart here, you can see here, we can spot the pattern of inverse head and shoulder. By looking at this pattern, you see actually the market comes up, it comes down, and then it moves a little bit, and it gives us inverse head and shoulder. Can you see that? So you can see inverse head and shoulder. This is the shoulder here, this is the shoulder, and this is the head. Okay, by looking at this pattern, when is the right spot for you to enter the market? Okay, by looking at this, you can see the market comes down, move a little bit up, forms the edge, and then it goes up. So when it goes up, you don't take trade actually here in this place. Actually this place you put the stop loss, and then the market goes up, and then it will reverse and test this first shoulder here. When it reverse and test this first shoulder here, that means you enter the trade here, and then you see the market goes up. This is how you spot the head and shoulder, inverse head and shoulder, when the market is trying to go uptrend. Okay, the last pattern that you spot in the market is called double bottom. Okay, double bottom is, you will see in the first explanation is for the market. When the market is about to go bearish, it will form the letter M. But for the market is about to go uptrend or go bullish, then you will see the double bottom. The double bottom, it will form a letter W. So you can see here, you can see when the market is trying to go uptrend, then when you see this pattern double bottom, the double bottom will give like a W pattern. It will give a W pattern. This is the first touch and the second touch. This is the neckline. So when you see this pattern happen, that means that you're now in a better position to spot the market. The market will be going uptrend. Okay, you can see in the real chart, if you go to the real chart here, you can see the market trends down, and then it goes up, and then it comes down, and it forms W. Can you see that? Okay, it forms the W, and then you can see this is the first touch here and the second touch here, and this is the neckline. So when you see this pattern, you know that the market will be going uptrend. So what you do is, when the market comes down, and form the W pattern here, what you do is, you don't, when the market comes down and try to reverse up there, you don't take trade there. Okay, you have to wait and it will go up and come back and test this line here. Then you can enter the trade here, so that when you enter the trade here, the market start going uptrend. So this is how we spot the double bottom pattern.